And that's why the companies are not really decoupling from the situation in China. What is the case, of course, is that they look at the domestic economy of China and see how that's grown, because this is the change compared to 20 years ago. Therefore, companies will continue to invest here.
Hello everyone, welcome to SFC Market Exclusive. Chinese economy is maintaining recovery momentum. The official data showed that China's GDP rose 4.9% in the third quarter. After the data was released, global financial institutions raised their 2023 growth forecasts for China's economy. So, will China's economy maintain a positive recovery momentum? What opportunities will high-quality growth bring to foreign companies? To answer these questions, John Rose, former Director of Economic and Business Policy for the Mayor of London, is joining us now. Hello, Mr. Rose, glad to see you. The latest data was released. What are key takeaways from the data?
But I was extremely impressed by the recovery in tourism. I mean, because before I arrived a couple of days ago, my friends were sending me photographs from the tourist locations because they looked almost dangerous. I don't mean seriously, physically dangerous, but there were so many people there. And again, a friend of mine, because she was going to Xi'an to see the Terracotta Warriors, but she couldn't get tickets. So I know that's a bit anecdotal, but there seems to be very large numbers of visitors, etc.
Besides tourism, what else have you observed?
Well, the fact that the retail sales are recovering from what was extreme compression last year. So all the signs are really of recovery in consumption. So if you look at the main sectors of the economy, exports are not good, but I wouldn't expect them to be. The world economy is not in a good state at the present time. It's slowing down. There are actually some quite significant problems in Europe. The economy is almost not growing in Europe. In the United States, they've got a problem, financial problems. The profitability situation in the United States and the investment problem is extraordinarily serious. In the first 6 months of this year, depreciation in US capital expenditure was higher than investment. So we have a paradox, which is the world's #1 capitalist economy wasn't actually producing any capital during the first 6 months of this year. So therefore, the international situation is not good and won't be good, let's say, for the next year. So we can't have great hope from the point of exports.
Actually, we all know that China's economy is shifting to high quality. From your perspective, how to define high quality?
Well, it's really, in these temps, is particularly high value added. That means going into sectors which add a great deal of value in production. But again, and that's particularly associated with technological advance and research and development, etc. But again, you see confusions about this. You can see people talk about innovation. Well, that's correct. You've got to have innovation, but an innovation can't just be a good idea. You've got to embody this innovation in physical investment. When you had the development of the internet, it wasn't just merely that the people had the good idea of the internet. You had to create an entire internet service in the entire economy. You had to have all the internet carriers, all the workstations, all the infrastructure for the internet. Now, a thing which is talked about a great deal, for example, is artificial intelligence. That's absolutely correct. It's great. I mean, I use it all the time. Even for some things of doing research, not speak of the more sophisticated uses can be put. But that means you're going to have entirely new chipsets. You're going to have entirely new types of computing capacity. You're going to have a lot of physical investment. And people seem to think somehow that innovation consists of having a good ideas. Well, that's no good at all. If you have a good idea, it'll stay somewhere in university or in a research department. So the innovation has got to be embodied in capital investment. And this is the problem. I mean, China's got an economy which is rather balanced in the sense that about approximately 40% of the investment is state investment. That's going fine. That can be controlled by the government. but at slightly under 60% investment in private investment, and that's not going well. And it's not going well for a simple reason, because the profitability of companies has not gone up. So therefore, the high quality development means you've got to have, one, a lot of expenditure on research and development, which is the government encourages very much. But then you've got to make it profitable to invest in the physical machinery and the physical technology. And that's not being looked at enough. And there's again a sort of confusion that people think, innovation is just an idea, but it's not. It's got to be invested in something.
In the Q3, the GDP growth of China is 4.9%. Did this match your expectation?
At the present time, I would think it's very slightly above trend. I mean, let's take the last 4 years. In the last 4 years, obviously every economy in the world has had problems because of COVID. And now China has had much less problems than other countries. In the last 4 years, which covers the pandemic, China's economy grew in total by 19.2%. The US economy grew by 7.5%, and the Eurozone grew by slightly under 4%. Now that means that China's economy grew 2.5 times as fast as the United States and 6 times as fast as the Eurozone. Well, in comparative terms, it obviously means that China's economy is doing much better than the United States and much better than the Eurozone. It's just not doing as well as it was doing.
Western media argues China's economy has peaked. How do you think about these comments?
I've been writing on China's economy for more than 30 years. In that time, every year, somebody in the West predicts that China's economy is about to collapse. And then when it doesn't collapse, they say it's going to happen next year. And then when it doesn't happen the next year, they say it's going to happen the year after. If you're in the advising companies business, it's simple. You get a 1-year contract. If your predictions turn out to be correct, they renew your contract. And if they turn out not to be correct, they don't renew your contract. That's fine. I lived for many years on 12-month contracts because I got things accurately and had a very high renewal rate. And when people come on and they say, China's economy is going to collapse, well, if they were advising a company, they'd be sacked. But in this case, they continue to appear on the television. I mean, there's one guy in the West who wrote a book saying China's economy goes collapse in 2001. That's more than 20 years ago. It hasn't collapsed and still appears regularly as a China expert.
So do you think China's economy will fall into deflation?
I wouldn't think so. I won't think deflation. You mean falling? If you mean consumer prices, of course, the PPI is already in deflation. I wouldn't think so. Slightly for technical reasons, because energy prices are going up. I would say, if you look at the economy, I would have favoured. I am in favour of a moderate stimulus. By that, I definitely don't mean the type of stimulus which was after 2008. But I think the economy is growing slightly slower than is possible. And let's say 0.5%, maybe 0.5% a year, 1% a year, something of that type. So I personally would favour, in light of all these factors, and particularly because the international situation is going to be bad, I would favour a moderate stimulus. During the COVID pandemic, its export situation was very good because a lot of countries had big economic problems. So the economy got a boost during the last 3 years from exports. That's not going to be the case. The export situation is not going to be very good this year. And that is the numbers so far this year confirm it. And therefore, if you're going to have a bad external situation, you need a bit more domestic stimulus. That would be my view. Again, I want to be very clear, not a 2008 type gigantic stimulus, but a bit more stimulus is what I would think. Maybe say aiming to get the rate growth. I think you can get the growth rate of the economy up by 0.5%, 1%, something of that type.
To further maintain its momentum in economy, Chinese government took many actions. So how do you comment on these actions?
Well, overall, I think that they're good. I mean, you're getting a loosening of monetary policy. The level of state investment continues to be very reasonable. That's not a problem. Perhaps you could have a bit more infrastructure investment because it's a myth that China's got enough infrastructure. It's just not true. If you take per capita, China's still got much less infrastructure than the United States in terms of roads per person, railways per person, power supply per person, etc. It's well below the US level. You could have a bit more of that.
Despite the Western countries' push for decoupling from China, multinationals still invest in China. How do you think about this trend? What are multinationals looking for from China?
Rapid growth of its economy so that they can make profit. That's very, very simple. That's what they want. Therefore, they're not immune from the question of what is the profitability level in the economy. Yeah, I mean, the United States is gaining a whole load of rhetoric. I've seen it before. I mean, what they're trying to do is they're trying to say, don't invest in China, go and invest in India. That's really what they're doing. The reshoring, as it's called, that is getting manufacturing back to the United States, has been a total failure. There's manufacturing in the United States hasn't even regained their level, its previous peak levels. So that's been an absolute failure. All the reports that came out from people like the Boston Consulting Group, there was going to be reshoring, there was going to be big investment in manufacturing in the United States. It's all nonsense. It's not going to happen because the cost level's too high in the United States. So therefore, really, the companies are going to want to invest in a developing economy. Or that is, apart from some very high-tech companies, which will stay in the US. Okay, in the past, what they've done is they've been investing in China. So what the United States is trying to say is, don't invest in China, invest in India. That's really all the propaganda. If you read the Western material, they're all about how wonderful India's economy is, et cetera, et cetera. But the problem is, it's not really true, so because India's infrastructure is not so good. India's communication system is not so good. And there's no point in having a good factory with cheap labor if you can't get its products to ports, if you haven't got a power supply that allows it to run all the time, if you don't have trained labor that can run it, etc. And that's why the companies are not really decoupling from the situation in China. What is the case, of course, is that they look at the domestic economy of China and see how that's grown, because this is the change compared to 20 years ago. 20 years ago, foreign companies invested in China basically to export. They weren't interested in China's domestic market. They wanted to use it as an export base. It's true that the exports for foreign companies is still very important in China, but it's been replaced now by the domestic market within China. So really what they're going to look at is how fast China's domestic economy grows. And although China's economy has grown a bit more slowly than it was in the past, as I say, if we take the last 4 years, China's economy has still grown 2.5 times as fast as the United States and 6 times as fast as Europe. Therefore, companies will continue to invest here.
As we discussed before, high quality has become the theme for China's economy. So what opportunities will high quality growth bring to foreign companies?
Well, firstly, because they will continue to have an advantage in very high technology. China has now got a situation where it's not merely got one very high technology company. For example, Huawei, everybody used to discuss just Huawei, because that's the world's most efficient telecommunications company. But everybody spent their time discussing one company because really China only had one company that was leading. But now it's getting much more there. Hikvision's the best producer of, cameras. I mean, surveillance cameras for traffic things, for security, etc. in the world. And TikTok has now become a sensation. I mean, 10 years ago, people used to say China can't develop brands. Okay, it's true, China's good at assembling things. China can assemble the iPhone or something, but it can't produce a brand. Well, that looks ridiculous now because TikTok's now become the world's most visited website. And you've got a problem in the United States. Trump wanted to ban TikTok, and some people in the United States want to ban TikTok, but TikTok is on 120 million Americans' phones. And it was very nicely put on the American TV broadcast. You think carefully before picking an argument with 120 million people. So therefore, although there's been a lot of talk about banning TikTok, they haven't actually banned TikTok. And now with the EV vehicles, for example, BYD, for example, is now going to overtake Tesla as the world's biggest manufacturer of electric vehicles. And if the United States and Europe want to make the switch to electric vehicles and they want to cut China's car companies out, then they're going to raise the prices, and they're not going to raise the prices of cars, electric cars, by a few $100s. They're going to increase the price of electric cars by thousands and thousands of dollars. And that's going to make the switch to electrical vehicles much less efficient. It's going to create unpopularity amongst the population. And this is because China's going from the situation of having one or two leading companies in the world in high technology to having 20 or 30. But nevertheless, there are still areas in which the US companies are still much more high-tech than China.
All right. Thank you, Mr. Ross. Bye.
Okay. Thank you very much indeed. Okay. See you. Bye.
Although China's economy has grown a bit more slowly than it was in the past, it's still attractive for foreign enterprises. That's all for today's show. Thank you for watching. See you.